I remind you what happens when you go to 50% leverage. You're looking at, BTC factors that go from 4 to 20 or more. So can we actually generate 2, 3, 4, 5, 6 times Bitcoin performance with intelligent leverage? Yeah, we can. We just have to be thoughtful about our capital structure, and we got to adjust to evolving Bitcoin volatility. This equity is providing 9.9 times Bitcoin. So the BTC factor goes almost to 10. And so you can see the blue zone is where you're 2 to 4x Bitcoin, and the green zone is just 4 to 20x. It's screaming.
Hey guys, welcome to Everyday Finance. The Bitcoin spotlight is once again on Michael Saylor, but the stakes are considerably higher and the game is much larger. The corporate world is now being impacted by Bitcoin's explosive growth, and MicroStrategy is at the forefront of this. By fully committing to Bitcoin, the company has completely changed the laws of corporate finance. Saylor has transformed MicroStrategy into a financial powerhouse that is fully based on digital technology. In contrast to most businesses that view Bitcoin as a speculative investment or side bet, in addition to Bitcoin's unrelenting ascent, MicroStrategy's financial results astounded Wall Street, making the second quarter of 2025 historic. In just the first 7 months of 2024, the company raised an incredible $18.3 billion in capital, which is so huge that it nearly seems impossible. This amount represents 81% of all U.S. preferred equity raised in 2024. Additionally, it introduced 4 new credit products: STRF, STRK, STRD, and STRC. Of them, STRC became the largest initial public offering IPO in the United States this year. The outcomes were astounding. Net income surged to around $10 billion. GAAP operating income reached approximately $14 billion, and earnings per share rose to almost $3,260, which may have been the greatest in the entire S&P 500. Bitcoin's price surge and the implementation of new fair value accounting standards, which now make it possible for Bitcoin gains to be more visibly displayed on the balance sheet than ever before, were the direct causes of this, not just astute management. However, there is a maelstrom of risk and suspicion hidden behind these record-breaking numbers. Many conventional investors view Bitcoin's volatility and lack of cash flow as a clear warning sign. Saylor, however, sees it as the unavoidable future, a significant change in the way businesses handle their treasuries. The big question at hand is whether MicroStrategy's audacious experiment will lead to a new wave of corporate acceptance of Bitcoin, changing the financial landscape, or if it will ultimately contribute to the next big speculative bubble. Revisit some of Michael Saylor's videos to get his thoughts on what might be a watershed moment in financial history.
So what is the universe of assets that would be interested in MSTR? Well, it's the S&P 500, it's NASDAQ, it's the Mag 7 investors, it's Bitcoin investors. And as you can see, MSTR is outperforming all of those competitors right now. And so if what you want is the Amazon of digital capital, then that's strategy. Now, the question in your mind is, can you actually go to 30% leverage or 40 or 50% leverage? So let's look at the credit model. So here we go. This is the existing capital structure, assuming the 40 vol and assuming 0% Bitcoin return. So this is a skeptical outlook for Bitcoin. It's going up 0% forever, and it's going to stay volatile. And what this shows you is that the theoretical credit spread for all of the convertible bonds is investment grade, right? And the credit of the preferreds looks to be mezzanine, with a slight high yield one. Now you can see there's spread premiums across the board here. So even if you're a skeptic and you think Bitcoin's going to zero or going up zero forever and it's volatile, you've still got massive spread premiums. These are all underpriced by the market. The risk is misunderstood. Next. So here you see what happens if the volatility comes from 40 to 35, and all of a sudden all of the preferreds become mezzanine quality, and the credit, the risk just drops away from the bonds. We go to 30. At 30 vol, you see you've pretty much stripped all the risk off the bonds, and you've even got investment grade credit at the Strife level, even assuming a skeptical view of the outlook of Bitcoin. Now let's assume you're not a skeptic. What if you think Bitcoin's as good as the S&P? If Bitcoin goes up 10% a year, even if it stays volatile at 40 vol, every one of these instruments is investment grade or investment grade equivalent, by our BTC model. And if you think that Bitcoin's going up 20% a year, you can see the risk just drops away. And now you've got credit spreads, 0 basis points, 5, 8, 9, 14 basis points. So you can see anybody in the world running fixed income that wants fixed income that has a positive view toward Bitcoin, looking at this model, will see that these are all really compelling instruments. Now, what happens if you're a maximalist? If you're a maximalist, you can see the BTC risk drops the basis points, the credit spreads go to nothing, the spread premiums blow out. And is the world got a lot of maximalists? Yeah, there's a lot of people that believe in Bitcoin. They're running fixed income funds and they have treasuries. Or how about people that run Bitcoin companies that have treasuries? So just because you believe Bitcoin's going to go up forever doesn't mean that you can put 100% of your corporate treasury in it for the next 4 weeks. So we've got a solution to people that are Bitcoin believers, which is pretty compelling right now. Now we've done a pro forma. What happens if we actually equitize all the convertible bonds? So we convert all the convertible bonds to equity, and now we've just got $6 billion of preferred equity. This isn't liability. It's never coming due. We're never paying back the $6.3 billion. So it's equity as opposed to debt. And yet it's the best form of leverage, right? It's all the benefits of debt leverage, but none of the liabilities of debt leverage. So we get the leverage of $6 billion in preferreds. You can see the BTC rating of these things goes through the roof. Strife goes to 70, Stretch goes to 20, Strike goes to 15, Stride goes to 12. The BTC risk falls to single double digits. 3 of the 4 are investment grade credit. One of them is a extremely high quality mezzanine credit. And that is assuming, as you can see, that you're a skeptic and you think Bitcoin is not going to appreciate a single dollar forever, and it's going to stay volatile. Now, let's look at another model. What if you're an investor or a trader in this case? You think Bitcoin's going up 10% a year? Now you can see all these instruments are investment grade, like good, high quality investment grade, 0 to 15 or 0 to 17 basis points. Now let's do another model. What if we actually went to 30% leverage? What if we issued another like 15, 16 to 17, call it 16 to 17 billion dollars worth of preferreds, and we have $22 billion of preferred outstanding against 75 billion in Bitcoin. Well, now you're looking at an overall BTC rating of 3.3, a leverage of 30%. And even with Bitcoin's volatile, you can see that Strife and Stretch are both investment grade. And Strike and Stride are pretty high quality, pretty decent quality mezzanine grade, even with high volatility. Now, what happens if I go to 50%? You can imagine, maybe not tomorrow or in a year, but over time, Bitcoin's volatility will probably move off of 40% to 30%. The 30-day trailing volatility of Bitcoin is less than 30% right now. And so at a 30 BTC vol and a 10% BTC outlook, 3 of these 4 instruments are investment grade. Stride is decent grade mezzanine. And so, I remind you what happens when you go to 50% leverage. You're looking at, BTC factors that go from 4 to 20 or more. So can we actually generate 2, 3, 4, 5, 6 times Bitcoin performance with intelligent leverage? Yeah, we can. We just have to be thoughtful about our capital structure, and we got to adjust to evolving Bitcoin volatility.
By inventing a whole new valuation metric known as Bitcoin per share BPs, Michael Saylor has once again challenged the market's perception of Bitcoin. By rephrasing equity in terms of the amount of Bitcoin that each share represents, BPs effectively links shareholder value to Bitcoin itself, in contrast to standard earnings per share. BPs increased by an astounding 39,716 satoshis in 2025 alone, reaching 198,543 satoshis per share since 2020. Saylor now considers how well a business can turn its equity into exposure to Bitcoin rather than just income. He didn't stop there, though. Saylor introduced a method that uses Bitcoin's volatility to create structured credit products, which he refers to as a Bitcoin refinery. These include STRK, which offers guaranteed yields on partial stock gains, STRF, which functions similarly to senior debt, STRD, which targets high-yield investors, and STRC, which is a dividend-paying instrument linked to short-term yield and looks like a savings account powered by Bitcoin. Their degree of over-collateralization, which is significantly higher than industry norms, is what makes these items groundbreaking. When compared to regular credit markets, where leverage seldom exceeds 2.5x, STRF and STRC are over-collateralized by 10x, STRK by 6x, and STRD by 3x. Saylor is purposefully manipulating trust for significant institutional capital, not retail hype. His ultimate goal is to create a yield curve based on Bitcoin and a comprehensive credit ecosystem built on top of it, which may release trillions of dollars in global capital that are currently locked up in legacy financial instruments like exchange-traded funds ETFs. If this vision comes to pass, Bitcoin's function might transcend beyond simply being digital gold to include serving as the foundation of international credit markets, or by transforming the way that people view money in general. Let's examine Saylor's session in more detail to see how far this experiment can go.
So that takes us to MSTR. What is MSTR? It's amplified Bitcoin, right? If you want more Bitcoin, if you want 2x Bitcoin or 3x or 4x the return and 4x the volatility of Bitcoin, you need a Bitcoin-backed equity. And we're aiming this for Magnificent Seven investors that they believe in the digital transformation of capital, right? We aim to be the Amazon of capital markets, right? Completely disrupt the business model. And you can see it in our metrics, where we're running 101% annualized performance 5 years in a row, right? In 10 days, it'll be 5 years. So doubling every year for 5 years, it's hard to say that's a fluke. And here's another illustration of amplified Bitcoin. You can see, bonds are underperforming, real estate's a 6%er, gold is a 10%er, the S&P is the cost of capital, 14%. The Mag 7 doubles that, Bitcoin doubles that, we double Bitcoin, right? And you can see in the last year, it's the same exact thing, right? Even more so. So I want to explain how we amplify Bitcoin. Okay, so we start with 199,000 satoshis a share, and if we have no leverage, if we had no credit strategy, if we couldn't issue credit, then 10 years from now we've got 199,000 satoshis a share. That's like an ETF. That's a BTC factor of 1. But if we issue preferred that's equal to 10% of our Bitcoin assets, that's 10% leverage, it turns out that we have 267,000 satoshis a share at the end of the period because we're not diluting the common stock as rapidly as we're building the Bitcoin. And if we go to 20% leverage, you see you end up with 376,000 satoshis a share. And now let's go to 30% leverage. So you can see at 30% leverage, we would have 555,000 satoshis per share. the green bars you see, that is the work that the treasury operation is doing. When people wonder what's the value added of a Bitcoin treasury company, it's the ability to create the green bar over the orange bar. And that's a 2.8 BTC factor. That means that, what does it mean? It means in essence, you would think that the floor for MNAV for a company that's got this sort of performance is 2.8, right? It's not the MNAV, but it's at least the floor. The MNAV of the company should be higher than 2.8. Now let's delve a little bit deeper into this idea. So I'm going to show you what happens as you increase the leverage in a Bitcoin treasury company like ours. You can see if we have 30% leverage and a Bitcoin appreciates at 30% ARR over the time period, you end up with an amplification of 2.8. You're getting 2.8 the Bitcoin performance, probably 2.8 the Bitcoin volatility, right? And you can see here, as Bitcoin grows faster, the amplification increases. If we hold the leverage constant, but Bitcoin grows at 50%, you're a 4.7 lever. And you can also see that if you hold the growth rate of Bitcoin constant but increase the leverage, like we're growing Bitcoin at 30% a year, but we go to 50% leverage, now we're 7.8 amplified, a BTC factor of nearly 8. You're getting 8 times the performance of Bitcoin. In the extreme, if you go to 50% leverage and Bitcoin goes on a tear and grows 50% a year, you're getting 22x performance on the equity versus just holding the ETF. Let's take a different slice of this. If I have Bitcoin growing at 30% a year and my credit improves or the interest rates fall, if SOFR falls to 100 basis points and we're able to reduce our dividend rate from 10 to 6, you can see the amplification goes from 2.6 to 3. And you can see that as the credit improves of the company, the amplification increases. And then if we consider the next slide, when you actually combine leverage with credit, if you actually get to 50% leverage and and the interest rates fall to 5%, or if your credit spreads compress to 5%, this equity is providing 9.9 times Bitcoin. So the BTC factor goes almost to 10. And so you can see the blue zone is where you're 2 to 4x Bitcoin, and the green zone is just 4 to 20x. It's screaming.
MicroStrategy, a structured, non-debt-based leverage machine that Michael Saylor markets as amplified Bitcoin, is said to be able to provide returns that are 2 to 20 times higher than those of Bitcoin without the risk of interest or maturity. However, Wall Street still views Bitcoin as a dangerous outlier, ranking its market cap 96th in the S&P, despite data that would place it in the top 15. The company's financials support the daring projecting $34 billion in operational income and $24 billion net income this year if Bitcoin hits $150,000, even if competitors, like Tether, which have lesser earnings, are more respected. MicroStrategy trades at a discount with a PE ratio of only 4.7. Compared to the index average of 24, Saylor maintains that this is untrue. Citing MicroStrategy's hegemony in Bitcoin options with an open interest of almost $100 billion, 5 times that of Bitcoin, passive flows from index inclusion, and access to multi-trillion-dollar credit and stock markets that ETFs are unable to access. His strategy is to get rid of all convertible debt, completely commit to over-collateralized preferred equity structures 10x for STRF and STRC, 6x for STRK, and 3x for STRD, and eventually overtake Berkshire Hathaway as the biggest treasury in the world. But since everything is dependent on Bitcoin, the danger's obvious. The entire system might collapse in the event of a stall or crash because leverage, valuation, and credit instruments all depend on ongoing Bitcoin strength. It's a one-way bet with no safety net or hedge. The question is whether Saylor is laying the groundwork for a dramatic crash or creating the template for Wall Street finance's future. As of right now, investors are watching with equal parts amazement and worry as it continues to be one of the most audacious ventures in corporate history.